Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by Dan Innes, Paul Strome and Nicole Dines. Nicole, what's your pick of the stories this week?
I was interested in a story in Milan. An Italian pension fund, Empaia, has bought 50% of what is known as the PwC Tower in the Citylife area of Milan, one of Milan's many newly regenerated areas. Bought it for 160 million for a 50% stake. And it's interesting because it's a good news for the office sector as well as for Milan. The consulting group is paying 200 million euros, according to reports, for a 15-year lease for its new Italian headquarters. And at the center of Citylife, which is Europe's biggest pedestrianized area, there's this square with these three very distinctive skyscrapers. One is at PwC, one is Generali, one is Allianz. So, three big companies with their name very prominently on their headquarters, which is a big symbol of, as I said, good news for Milan, but good news for offices as well. And moving from offices to residential, I was really riveted by all the news that came out in the last few days on house price growth in the UK, which continues unabated, and double-digit house price inflation, 10.9% according to Nationwide, the biggest rise in over 7 years. And it's the deepening supply and demand imbalance. And the prices, according to experts, are set to accelerate further. There's a real race for space, and there's some are temporary factors because, as we know, the pandemic has fueled demand for bigger houses, bigger homes with outside space. And obviously in the UK, a very temporary factor, rush ahead of the end of stamp duty, the stamp duty rise on the 1st of July, and also improving mortgage availability. The RICS, for example, said that supply and demand gap is its widest levels in 2013, and new listings are just not keeping up with demand from interested buyers. But they say there's no sign of house price inflation losing any steam soon. And usually what is remarkable about these latest figures is that usually it's London and the South as the driving force of house price growth in the UK. But now London is sort of growing more slowly, around 3%. And the places on the coast are particularly in demand. And the attention of the world in the last few days has been on the G7 in Cornwall. And we know the locals around Carbis Bay and St. Ives, where it was held, were very much against this gathering because they thought it would bring even more attention to Cornwall and increase prices.
Yes, it's interesting, that focus on residential. I had an interview with Pedro Silveira, chairman of Grupo SIL, based in Lisbon, and they're actively developing residential now in expectation of a residential boom, which will be coming in 2 years' time. Dan, what have you been following?
I'm kicking off with another G7 related story like Nicole. And the UK's Prime Minister, Boris Johnson, he visited Cornwall's West Carclays Garden Village development in St Austell, which is right alongside the Eden project. It's one of the country's preeminent eco-friendly sustainable garden village projects. It's going to eventually have 1,500 homes for local people. The project's being delivered by EcoBoss, which is the joint venture company between Imerys and Erascom Development Holdings. You might recognise Erascom as well because it has major resort developments elsewhere in places like Montenegro. But the project's adhering to the highest sustainability standards in the market. And that's all kind of in alignment with the government's Build Back Better scheme and, of course, all those G7 climate commitments. And when he saw it, Boris Johnson said, this fantastic project is not only going to be carbon neutral, but carbon positive. And it's a model for Cornwall and the country as we build back better and greener. Next up, to retail news that broke on Thursday is that Selfridges, the department store, that's been put up for sale for about £4 billion by the billionaire Weston family. They've drafted in Credit Suisse to advise them on the possible sale after they'd actually had an unsolicited takeover approach, which is an interesting story to follow. There was an article in the FT magazine the weekend before last by Edwin Heathcote, the architectural correspondent, about the future of department stores. And he looked at the repurposing of spaces to suit customer needs, but with some hugely positive case studies actually on the department store world from around places like Beijing. But there's lots of activity in the department store world. I mean, last month we saw the relaunch of Europe's longest trading department store, which is of course Steen and Strum in Oslo, which has been trading successfully since 1797. And last up is Savills Investment Management. They've acquired Amazon's fulfillment centre in Baden in the UK for 161 million from Vestas Investment Management. represented by BNP Paribas. It's a 1 million square foot asset that they'd originally acquired in 2016 for 125 million. And it was the first collaboration at the time between BNP and Vestas. But I mean, since then, the partners have invested over 700 million euros in different opportunities in that office and logistics sector across continental Europe. But the Baden asset, that's benefited from significant tenant investment over the last few years, including the planned installation of 7,360 solar panels on the roof. So again, back to that sustainability and G7 agenda, Richard.
Yes, that link with sustainability also came through in the reporting around Vertical Aerospace, announcing plans to go public in a 2.2 billion deal, as well as pre-orders from American Airlines and Virgin worth up to 4 billion, as they seek, according to their website, to make air travel personal, on demand and carbon free. Transport always has a big connection with real estate, and it'll be interesting to follow this in terms of carbon free flight and the influence that may have. Paul, what have you been following?
Well, this week there's been some focus on the elderly housing and care sector, which has underlined the realization that no matter what else happens in the world, there's a huge cohort of older people coming through, many of whom are going to need care in their later years, and the demand is going to be pretty inelastic. This week, Europa Capital announced its debut in senior living investment, paying 45 million euros for a Danish hospital, which will be converted into senior housing. The acquisition has been made on behalf of Europa's latest value add fund and has been made through a joint venture with Copenhagen-based Keystone Investment Management and Alon Group, the 5,300 square metre complex, which will have 58 assisted living units, let to Nordic care provider Attendo. And there'll be 108 private build-to-rent units for seniors there as well. Europa has done plenty of business in the living sector, which accounted for about 80% of its deals activity in 2020. And in all, the company's got about 1 billion invested in PRS assets and student accommodation, but elderly living is new for it. Slightly different is Spanish REIT Adriano Care, which is managed by the Spanish hotels and residential specialist Azora. Adriano Care specializes in the elderly care sector. Adriano Care now has a portfolio of 14 assets and close to 1,800 beds, and still has more than 100 million to spend. In the statement that it issued this week, it said that measured against the World Health Organization's objectives, Spain currently has a deficit of more than 70,000 beds in senior homes, and the deficit is expected to continue to grow by 11,000 places per year. This chimes with some of the findings published in a report by Knight Frank this week. The European Healthcare Elderly Care Market Research 2021 publication states that the European elderly care property investment market saw transactions worth 7.2 billion euros last year. Knight Frank points out that the number of Europeans over the age of 65 is set to grow by 50% within the next 30 years, from 100 million at present to 150 million. Knight Frank points out that the universal elderly care is a less developed concept in southern Europe, such as Spain and Italy. However, the over 80 population in Spain is set to double by 2050, and in Italy, they'll have the second highest proportion of over 80s, 12.8% by then. So international operators and real estate investors are beginning to target these markets.
Yes, the trend in terms of senior living and healthcare is going to be huge across Europe, and you can already see a lot of capital lining up to enter the sector. I also noticed Avison Young continues to expand in Europe with the addition of GVA Real Consult in Austria, which will rebrand as Avison Young, with Herbert Reiner as managing director, joined by Andreas Obermeier as principal. Interesting to see Avison Young actively building its presence. Thank you, Paul. Thank you, Dan. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the week in real assets.